Hello and welcome to Understanding Depreciation and TB Pro Desktop. I am Jason Garner, president of TBP Pro, and today it's my pleasure to bring to you an informational webinar about how depreciation works in the TBP Pro Desktop software. In order to do that, we'll set this agenda. We'll first talk about who is TBP Pro. Then we'll move to depreciation, or the basics of it. We'll specifically look at how depreciation is handled in the TBP Pro 1040 desktop software, and also about how depreciation looks on a balance sheet, as well as an income statement. We'll close up today's presentation by looking at the TBP suite of products and invite you to join our community and become a year-round revenue machine. So we are TBP Pro. We are building a communities of tax professionals across the nation that want to turn their offices into year-round revenue machines. We want tax preparation offices to offer bookkeeping and payroll services so that they're not just making money for 4 months, but they're making money year-round. They're acquiring bookkeeping, they're acquiring payroll clients. And we've developed a system based on a very successful office that allows you to offer these services in days, not years. Within just a few days of our training, you'll be acquiring bookkeeping, payroll clients, and making money year-round. I encourage you to look at our website, www.tbppro.com, and also check us out on Facebook at facebook.com/TBP Pro Solutions. So with that, let's go ahead and get started. What are the basics of depreciation, or what is depreciation? Depreciation can be very much simplified into just an accounting convention that allows a company to write off an asset's value over a period of time, commonly referred to as the asset's useful life. So in essence, depreciation allows you to take something that you purchased for a business, and you're making a purchase onto that. You're spending money. But instead of saying, I spent $20,000 on this asset, and marking off $20,000 for that year, you're dividing that time amongst the years, because technically you're going to be using that asset for multiple years. So it allows for a more accurate reflection of your expenses, and we'll go through a couple of examples. Just to name one off the top of my head, to buy a computer. Hopefully that computer is going to last you more than 1 year. So one of the things you could do is depreciate that computer and divide that cost out by the number of years that you're going to use that. Depreciation is calculated with 4 items: price, or what you paid for it, the date that you purchased, the method in which you depreciated, and there's multiple options that you can use, and what we call the useful life. Now, useful life is just a term for an amount of years that you get for an asset. The IRS determines a lot of these, and also accounting practice standards covers a lot of these as well. So it's very easy to look these up when you're depreciating things. So let's take it a little bit deeper. For example, you purchase a lawnmower. You have a landscaping company, and you purchase a lawnmower for $3,500. Now, instead of writing that entire $3,500 off on your income for that year, because if you think about it, that would negatively affect your bottom line. Yes, you're spending the money, but you would have more of the expense in the first year of that and make your income for that year reduce. That's not always something you want to do. So let's say you purchased that $3,500 lawnmower for your landscaping company. You would determine the useful life of that particular asset for that business. In this case, 5 years. And a very simple way of depreciating is what's called the straight line method of depreciation. And that's just simply taking that purchase price and dividing by the years. In this case, it's $700. So instead of taking $3,500 for the first year, we're taking $700 for 5 years. If you think about it, there's no voodoo math involved. You're still writing off the $3,500. You're not cheating or making up expenses or additional revenue. You're simply spreading them out. And that's a very high level, very basic look at depreciation. But when it comes to using the TBP software, armed with this knowledge and just a little bit more, You're ready to take almost any asset that comes into your office and depreciate that in a method that's going to be most beneficial for your client. Here's another example, something that's going to last you a lot longer than a few years, hopefully. Let's say you purchase an office building for $250,000. You're not going to write off $250,000 in that first year. You're going to show a huge loss. It's not going to accurately reflect what your business is doing. Once again, you're going to determine the useful life. And if you look this up on irs.gov, commercial property useful life is 39 years. So a simplified straight line depreciation method is $250,000 divided by 39. Are you essentially going to take $6,410.26 over the next 39 years? Another example of how depreciation works. Hopefully you're gathering the concept of basically depreciation is nothing to be worried about, especially when working with TBP. It's simply spreading out the cost of an asset over how long you're going to use it. So most of these assets have a useful life that's either determined by the IRS or accounting standards. And depreciation certainly affects an individual's tax return or a business tax return, balance sheets, and income statements. Now, so far, the method that we've talked about is the straight line method. It's the easiest to calculate, the easiest to explain. But there are other methods. And again, a lot of these are suggested by the IRS or accounting standards, but there's a double declining balance in which you take more of a depreciation up front, and it kind of reduces as you move down. There's units of production for certain machines where you depreciate based on what they've made. And then there's a sum of years digits method as well. Various ways of doing it, but we're all getting to the same effect. We're taking a big upfront purchase and we're dividing it out over years. Another example, we're going to look at our same lawnmower, $3,500 purchase. Now, based on what we just said, just using a straight line depreciation, that would be that $700 a year deduction. There's something else called Section 179 deduction. This is a very powerful tool for you to use with your tax-paying clients. Section 179 for a lot of tangible assets allows the taxpayer to take the full price in that year. And this becomes a very nice tax planning tool because you can ask the taxpayer, are you planning on making more money this year or next year? Well, I got this huge job for this year. Well, then we want to consider a Section 179 deduction to reduce this cost this year. Now, you're not going to get anything after that, but you're going to take more of those expense this year when you have more of that income. Maybe the taxpayer says, no, I'm not having that great a year. Then we certainly want to depreciate it and not take advantage of this Section 179 deduction. But keep that in mind. That is a very common deduction. You see this a lot in farming. Those huge tractors that they purchase are very expensive pieces of machinery, and they are allowable for Section 179 deduction. So when these farmers have great weather and great years, they go out and purchase a tractor and they Section 179, or they take that entire expense that year. They're gaining a tractor and they're paying a lot less in their income taxes. So hopefully you can see how this is a very powerful tool in tax planning for your clients. There's also bonus depreciation. Bonus depreciation is very similar to Section 179 deduction, but it's a little bit more lenient in what you can do. You can take a specified percentage, 30, 50, or 100% of that depreciation. So you could just take a little bit more in that first year if you wanted to. So again, tax planning. Well, I'm having a fantastic year this year, but I might again next year. You might want to consider bonus depreciation. So that allows you to take a certain percentage of that depreciation up to 100% for that one lawnmower. So we've looked at that lawnmower 3 times. We've said $3,500 divided by 5 years, we could do $700. We've looked at Section 179. We'll take the entire thing this year. And we looked at bonus depreciation where we're just going to plan. Do we want 30, 50, or 100% for this particular asset? So you have a lot of options. And this is something that's very easily done in the TBP Pro Desktop software. And that's what I'm going to show you right now. Let's log into the TBP Pro software, and I have a return that's up and running, a 1040 return. Just a simple return with a couple of W-2s, but I've also went in and added a Schedule C and a Schedule E. My Schedule C, I just navigate to it by double-clicking on my forms tree on the left, and I'm here at my landscaping company. So I have a Schedule C, typical Schedule C here, just scrolling down, letting you see that. And we're going to use our lawnmower example. So this particular person with their landscaping business tells me as the tax professional, I purchased a lawnmower this year. I can go up to Add Form, and I can go to my Depreciation tab and select Landscaping by double-clicking. Nice keyboard shortcut, Control-N as a new asset will take you straight to that Depreciation tab. Let's double-click Landscaping. I have an asset in here already just to show what the depreciation would look like on the line. Let's click on New Asset. Depreciation in TBP Pro Desktop, you need 3 simple pieces of information. You need to know when they bought it. In this case, I'm simply going to leave this date as it is. You need to know what it is and pick it from this list. In this case, this is a special use vehicle, equipment, or truck. And it always helps just to name your assets just to keep track of them better. We'll say John Deere LM for John Deere lawnmower. So I need 2 pieces of information so far. The date placed in service, what it is. Find it in these asset class codes because these are very important. We specifically work with the IRS to build this table for you. And this table is what the IRS suggests that you use for depreciation. So it actually gives you the useful life, the method, and the convention. So you don't have to worry about looking up, how do I depreciate this? Or what method do I use? Or how long is it placed in service? You simply pick it from this list. Click OK. Takes you to this asset detail list. And in this case, you simply need to know the price. Once you enter that price, yes, there's some other options on here that we'll come back in a second. But for the overwhelming majority of the assets you come across, you are done. You have just depreciated this asset. Matter of fact, we even take it to the next level. We ask you if you want to use the special bonus depreciation for this particular asset. So we're saying, based on what you've entered, this would qualify for the bonus depreciation. If you want to use it, just click OK. So this is where you would ask your client, do you want more of a deduction this year? If they say yes, you simply click OK. And as you can see, I've now got this asset listed in my asset list. I click on Return to List and Close. And I have $3,500 more listed as a depreciation expense on line 13 of my Schedule C. And this is all that we need for the overwhelming majority of your assets. TBP Pro Desktop has very nice calculations and automations built in for you. Matter of fact, there's a form required, the form 4562 for depreciation. It is completely done. There is nothing else that you need to do on this for most of the assets that you're going to come across. It is calculated with the recovery, the convention, the method. All of these in the dark gray are calculated fields. That's simply all you need to do. Let's go back to that for a second. Let's do Control-N on my keyboard. Let's go back to landscaping. Let's go back to my John Deere lawnmower. And this time, let's click on our bonus depreciation tab at the bottom, because this time we are going to select the bonus depreciation. We are not going to select. We're going to opt out of the bonus depreciation. We'll click OK, and we'll click Close. This time, notice, we're taking $500. We'll close out, go back to our Schedule C. Now remember, we had $2,000 in on the previous asset. We are now at $2,500. So we're taking that $3,500 divided by 7, $500 a year. We're taking $500 a year on that lawnmower. It is that simple. It is date placed in service, what it is, and how much you paid for it. When you have those 3 pieces of information, TBP Pro Desktop can handle the calculations and allow you to focus on tax planning and giving your taxpayer the best outcome for their tax return. Let's take a look at this again. Let's go back to Control N. Let's go back to our landscaping, back to our John Deere lawnmower. There's also a depreciation tab at the top. And if you want to, you can click on that and see the calculations that are taking place. Once again, these are mostly calculated fields. Most of the time, there is nothing for you to do here, but just see how those calculations are taking place. It is that simple, that easy to add assets in TBP Pro Desktop. Let's look at another example. Before we move on, let's look at our John Deere lawnmower. One more time, instead of taking the bonus depreciation, here is where section 179 is listed. In this case, you can simply enter in the section 179, close, and you've taken the entire $3,500 deduction for that year. And now I'm back to $5,500 on my depreciation line. So it's that simple to use bonus depreciation, section 179, and to depreciate assets in TBP Pro Desktop. Another example, Control N. Let's look at our rental property. No assets listed on here, so let's click on New Asset. This time, we're going to depreciate a rental property. And also, please check our website, www.tbbpro.com, for our webinar schedule. We will have a webinar specifically for rental properties, and this will be covered again. In this case, same method. We need to know what it is, date placed in service, and I just need to find it on this list. Residential rental property. Just by selecting this, the software is going to know the convention, method, convention, and useful life of this asset. So I simply need to enter in the cost. And there is one more thing. For salvage value, we do put the cost of the land, because land, if you've heard this before, never depreciates. IRS doesn't consider land as any depreciable value. So if the land that this particular property is built on is worth $30,000, and this is something that's easily looked up with county tax records, and usually those are available online, you would enter the land price here and essentially close. That's it. I've now depreciated a residential rental property on a Schedule E tax return. I close, look at my Schedule E. I now have a depreciation expense for that rental property. Again, 3 easy steps. What it is, date placed in service, how much did you pay for that? TBP Desktop can take over the rest, do these calculations, let you focus on providing that tax service and that tax planning to your clients. The process is so simple and so streamlined that we do the exact same thing in business returns. Just going to click on my business returns tab at the top. And from here, once again, it's Control N. I select my IRS 1120S. This is an S Corp return. New asset, and it is the exact same thing. I could do a residential rental property. This time I'll do a computer. Date placed in service, what is it? There happens to be one for computers. Click OK. $800 computer that we purchased. I could take section 179 for that if I wanted to. In this case, I'm not. I'm simply going to click close. I could take bonus depreciation on this. In this case, I'm not. I'm just going to take my simple straight depreciation, click OK. And I just depreciated an asset on a corporate return. This should now be listed on the actual 1120S itself, thanks to the calculations built in to TBP Pro Desktop. And just like that, I've depreciated 3 assets, one of them being an asset for a corporation. TBP Pro, we want you depreciating assets, offering that tax planning to your clients, and doing the best for them exactly as they expect. So with that being said, let's go back in and finish up our presentation today. Now, depreciation is very important if you're doing bookkeeping and payroll, and it does show up on a balance sheet. This is something with our proprietary technique that we calculate for you. But as you can see in this example, depreciation is usually listed as a negative number against your assets or your more long-term assets. See land improvement buildings. This is what we've depreciated so far, and we take that away from the book value of that. And that's something that can cause a little bit of confusion when it comes to depreciation. Just because you're taking the depreciation expense, it doesn't necessarily affect the fair market value of that asset. You could still turn around and sell that building for more than you had in it. What we're affecting is the basis of the asset or the book value. And that's important for your balance sheet and your tax planning. But that's how depreciation looks on a balance sheet. Depreciation on an income statement is going to look very familiar to you because we just looked at a Schedule C, and a Schedule C is pretty much an income statement. But if you're looking at an income statement, you'll see that depreciation is simply listed as an expense. And it's something that comes off your bottom line. And it's one of those things where we talked about, we want to make sure that we're accurately reflecting that depreciation and tax planning for that client. We would hate for someone who's trying to get a loan to buy a house show a huge loss on their tax return because they didn't depreciate an asset that should have been spread out for years. That's a profitable business. Just because they purchased a multi-year asset in 1 year doesn't mean that that doesn't have to be accurately reflected in their income statement. And that's exactly what we do with depreciation, is we accurately reflect the current profit or loss for a business by spreading that asset out over time. In addition to TBP Desktop 1040, we're proud to offer our bookkeeping and accounting packages, but the program stands by itself as well. You have the reliability of a desktop program. You can see that the depreciation calculations are the best in the industry. We have text marketing capabilities, remote signature, easy due diligence requirement answerings, built-in document management, multi-office setup if you're in more than one location, deep discounts if you're doing bank products, and also if you're doing bank products, industry-leading rebates. So we'd love to show you a little bit more about this. Please visit our website at www.tbppro.com. Our bookkeeping and payroll package were developed at one of the most successful tax offices in the country. Over 10,000 returns and doing a lot of bookkeeping and payroll as well. It is a technology-driven turnkey approach. In days, we will have you offering bookkeeping and payroll services to your clients and earning year-round monthly revenue. You're paying bills all 12 months. Why not make money all 12 months? It is 100% supported by TBP. All software is provided, and it even comes with a client management system, SmartNet, which allows you to enter your clients and keep track of what they're doing and sending quotes and when you're contacting them and all sorts of things. But TBP is a true partner that handles most of the accounting work while you focus on building the relationship with your clients. We also have custom-made mobile apps, and what sets ours apart from everyone else is they are directly downloaded from the App Store or Google Marketplace. It's no longer an app, a generic cookie cutter app that someone has to scan a barcode or enter a code for it to be your office. As soon as it's downloaded, it is tied to your office. You tell people, go look for Jason's Tax Preparation in the Play Store. Find your app there. Thank you for joining us today and learning a little bit about depreciation. We hope that you'll consider joining TBP Pro, and we can turn your office into a year-round revenue machine. Feel free to sign up today for attending this live webinar and receive an additional 10% off your software price. Once again, I'm Jason Garner, president of TBP. It was delightful speaking with you today and showing you how the TBP Desktop can make depreciation a very easy and very profitable practice for your firm. Thank you.